Hi, you guys. Welcome back to the channel. My name is Brad. This is Firefly's Financial Toolbox. Recently, I had a viewer ask a question about robo-advisors and if I thought they were a good idea. First of all, I like doing my own finances. I like taking charge of my own portfolios. That being said, I know a lot of people out there don't like to have to worry about it. And a robo-advisor can be a great way for a low cost to get good diversification and really be hands-off. So the two that I know the best out there, and there are several, you guys, I'm just picking two because I know this. First one we're going to look at is Betterment. Betterment was one of the very first robo-advisors. They've been around for several years now. What a robo-advisor does is basically it asks you to set an asset allocation based on your risk tolerance, and then it creates a portfolio that reflects your risk tolerance. And then all you have to do is add money to it. And then as different asset classes go up or down, it will automatically rebalance you back to what you want it to be. So if you want to have a certain amount in US stocks, a certain amount in international, a certain amount in bonds, for example, it will keep that number for you. As I said, personally, I'm not a fan of doing it that way because I like having more hands-on approach. But for a lot of people who don't like this, it's a good way. So the first one we're going to look at is Betterment. And Betterment, as I said, has been around since 2010. And it says, in the wake of the financial crisis, to be a place built to help people do what's right with their money so they can live better. And they all these are pretty much the same. They have some sort of a checking account or money account. They have some sort of way to save money for like an emergency fund. And then they allow for investing. Now, the important thing for me is a lot of these out there do not offer a Roth IRA or an IRA option. You guys, you want one that can give you a Roth option. Now, I'm not saying after you max out the Roth, you shouldn't do taxable. You can, but the retirement account is very important. And one of the benefits of Betterment is that they allow for retirement accounts, as you can see. Now, the way this works, you guys, is they basically pick an amount of ETFs. Let's see if we can find something better. Let's go into this. Let's go into a review of Betterment. So Betterment is one of the pioneers in the robo-advisory industry, and one of the first to use technology to recommend a portfolio and automate the investment process. Betterment's platform is intuitive, user-friendly, and full of educational resources, making it our top choice for a beginner. It also allows top tax loss harvesting for all accounts, no matter the size and range. It's available for clients. You can use their planning tools and become. So let's take a look at the pros and cons. So the pros for Betterment: quick and easy account setup. Portfolios are fully transparent prior to funding. You can sync external accounts to individual goals, so you can link your bank accounts to move money if you want at times. Add a new goal at any time to track your progress. Easily change portfolio risk or switch to a different type of portfolio. So if you're in a portfolio that you don't really like, you can change that. That's kind of nice. And a checking and cash reserves features offers 2 ways to sweep money in and out of the account. Now let's talk about some of the cons, because everything has cons. Users of the planning function are constantly nudged to fund a better Betterment account. They're trying to upsell you guys. The standard plan incurs a charge of about $199 to $299 a year to talk to a financial planner. So they are available, but they do charge you for that. Their socially responsible portfolios are invested in ETFs, and there is no margin lending, secured loans, or borrowing options against your portfolio, because that's not what these are designed to be. So it gives it a 5 out of 5 for account setups. Gives it 4.8 out of 5 for goal setting. And as you can see, there's an example of the breakdown. Now, you guys, the fees are 0.25% annually. So 0.25% per year for a managed portfolio that can be hands-off, to me, isn't excessive. It's a little higher than I like to pay. I like 0.2 or lower, but it's not bad. The account services gets 3.5 out of 5. The portfolio construction, it says Betterment offers 5 portfolio types. The standard Betterment portfolio consists of globally diversified stock and bond ETFs, both from iShares and Vanguard, which I like. There are 3 socially responsible portfolios available. The broad impact portfolio, the climate impact portfolio, and the social impact portfolio. Focuses on U.S. companies that emphasize diversity. They have a Goldman Sachs portfolio. They have an income-focused all bond portfolio. Not for the young people. This is for people in retirement, folks. And then a flexible portfolio constructed from the same individual asset classes as the standard, but weighted according to your preferences. So that's a good. Their portfolio managed gets 5 out of 5. Their user experience is 4.9 out of 5. So pretty easy to use, you guys. Customer service gets 4.1 out of 5. The education and security, 4.8 out of 5. And their fees structure, 4.4 out of 5. Is Betterment a good fit for you? Along with Wealthfront, Betterment is one of the early pioneers in Robo-Advisors. This early experience has led to a platform grounded in goal setting and bolstered by the ability to pull in external accounts for a true consolidated view of your progress towards those goals. So the nice thing is you can link some other accounts and kind of keep a global eye of what's going on. Pretty good overall, you guys. Now let's take a look at Wealthfront. Now, full disclosure, had a Wealthfront cash account back when it started at 2.5%. It's now down to, I believe, 0.35. So I don't have any cash in there anymore because it's not worth as much as my Ally account. And they were constantly trying to get me, that was kind of a loss leader, to get me to invest with them. And as I said, I like doing things myself. So I don't have, but, and here you say that, okay, yeah, see their cash account's at 0.35%. So better than your bank account for sure. But let's look at long-term savings at work, automating your investments. Start with a solid foundation. We'll build a diversified portfolio of low-cost ETFs that aims to maximize returns while keeping you in your risk comfort zone. And our software maintains the appropriate mix over time. Reduce the taxes you pay. By implementing strategies like tax loss harvesting on your taxable accounts, we can help you lower your taxes you pay so you'll have more money to invest. Again, this has the same fee as Betterment, you guys, 0.25%. So as an all-inclusive, not too bad. It also allows you to do a single view of your finances so you can link other accounts, your other banking accounts, some of your other accounts, so that you can look at one app and see it all together. And of course, they also lend cash. So let's take a look at the Wealthfront review here. Wealthfront, our top choice overall for robo-advisors as well as best for goal setting, offers the full package of goal setting, planning, banking, and investing in an elegant, user-friendly platform. Wealthfront has continued to improve its offering over the past year when we gave it top awards to include a much more robust set of personal banking services. So remember, they're trying to get you in for the whole deal here. One thing I was not able to see, you guys, is whether or not they offer a Roth option here. So let's read on and see if we can find it. Let's look at the pros and cons real fast. Okay, so the pros. Terrific financial planning that helps you see the big picture. Goal setting assistance goes in depth for large goals such as home purchase and college savings. Portfolio lines of credit are available. If you have multiple goals, Path shows you the trade-offs you'll face. It does have tax loss harvesting, we discovered. So let's look at the cons. There's no online chat for customers or prospective customers. Wealthfront carries no SIPC insurance. That's a big downer. Portfolios under $100,000 are not customizable beyond risk settings. So it limits, if you have a smaller portfolio, how tailored you want to make it. Larger accounts may contain more expensive mutual funds. Yeah. Okay. Once your information is entered, including IRAs and 401ks, as well as any other investments you might have, such as Coinbase Wallet, Wealthfront shows you a picture of your current situation and your progress towards retirement. All of this is done without talking to an advisor. Unlike some robo-advisors that have made a session with a human advisor or part of their setup process. So they don't do that. Wealthfront allows you to open taxable individual, joint, and trust accounts, as well as traditional IRAs, Roth IRAs, and SEP IRAs, and 401k rollovers. Okay, so that's a good thing, you guys. As I said, always, always, always max out your tax-free or tax-deferred space before you go to taxable investing. And so if you don't have a Roth and you don't want to be the one doing a lot of heavy lifting, this might be the way for you. So it gets 5 out of 5 for goal setting. Account services, 3.6 out of 5. Portfolio construction, 3.9 out of 5. It says Wealthfront follows modern portfolio theory in creating asset allocations in your portfolio. There are 20 different portfolios available based on client risk scores. Wealthfront primarily uses low-cost ETFs to cover the 11 asset classes, not including cash. So that's good. I like that they use low-cost ETFs. I imagine they have Vanguard and maybe some iShares in there as well. Portfolio management gets 5 out of 5. The user experience, both mobile and desktop, seems to be good, 5 out of 5. Their customer service, 3.7 out of 5. It says Wealthfront is taking its non-human approach seriously. It does not have an online chat feature on its website or in its mobile apps. There is a customer support phone line staffed by licensed professionals. Most support questions posed on their Twitter feed are answered relatively quickly. So that could be a downer for me as well. Education and security, they give 5 out of 5. Commissions and fees, 4.9 out of 5. Now they do, as I said, if it's a simple fund, it's 0.25%, so the same as Betterment. But if you want a partially managed one, they do have some fees, and they go up per month based on how much you have in the thing. So is Wealthfront a good fit for you? Succeeds in becoming your digitally managed all-in-one financial situation. It is possible that the Robo-Advisor function will be overshadowed as it stands now. However, it is an impressive platform for algorithmic portfolio management. Like many other low-cost Robo-Advisors, Wealthfront doesn't offer you a lot in terms of customization. If you want to pick your own stocks, then you are looking at the wrong solution. If, however, you want to make regular deposits to a portfolio and not worry about it, Wealthfront is more than up to the job. So you guys, just like I said at the beginning, a Robo-Advisor is really ideal for somebody who is not interested in taking the time to pick stocks, to really even pick what investments they have. They just answer a little questionnaire. It tells you, hey, this is how much risk I'm willing to take or whatever. And they sort of customize the portfolio for you. The nice thing is all you have to do is make regular deposits into it. And that's all. It's all hands off. Now, just like any other investing, you guys, there's always a risk of losing money in an investment because stock prices go up and down, right? So do ETFs. But in answer to my viewer's question, I think if you are a person who doesn't want to be hands-on with investing, who wants to be able to do it simply without a lot of headaches and not worry about what's in there and just put it on autopilot, I think these are both two good options that are relatively low cost and will work for you in the long run. Anyway, what do you guys think? Do any of you use Robo-Advisors? If you do, let me know in the comments. If you got something out of this and you enjoyed yourself, do me a favor, give me a thumbs up. It really, really helps the algorithm, gets my video out to more people. And lastly, if you're not already subscribed, you guys, you know the deal. Hit the red button, ring the bell. All right, we'll see you. Thanks.